Good morning. I'm Leona Barr Davenport, President and CEO of the Atlanta Business League, and I would like to welcome you to the ABL COVID-19 Weekly Issues and Opportunities Series. We'd like to thank you for joining us this morning, and we're looking forward to hearing some excellent information that you will be able to utilize in your business. Our speakers this morning are Tashwanda Pinchback, partner with Balch and Bingham, Robert Benson, partner with King and Spalding. Our topic is employees, business owners, and the CARES Act. We want you to know what's in it for you. I want to bring to your attention that in the chat room, there is a resource guide link that is there for your usage. So please take a look at that during the session or after the session. You have access to that. If you have questions, please type them in the chat room. If you have not already sent your questions in, you can enter questions throughout the session this morning. Our presentation will run approximately 30 minutes at 9:30 a.m. We will then open up the session for Q&A, and we will respond to those questions that have been loaded into the chat room. So thank you again for joining us. Our first presenter is Ms. Tashwanda Pinchback, and she will be followed by Robert Benson. Tashwanda.
Good morning. As Leona said, my name is Tashwanda Pinchback Dixon. I'm a partner at Balch and Bingham here in Atlanta. Thank you all for joining us today. Owen, if you could get started with the first slide, I will start the presentation. So I'm a labor and employment lawyer at Balch and Bingham, and as such, I have been studying the recent legislation that has come out as it relates to employers and employees. The first that I'm going to talk about is the Families First Coronavirus Response Act. This became law on April 1st, 2020. Owen, next slide, please. It will remain in effect until December 31st, so the end of this year, and it applies to all employers who have less than 500 employees. This includes part-time employees. It also includes nonprofit organizations that have less than 500 employees, and it includes all government employees. Next slide, please. There are two parts of the FFCRA. The first part is the Emergency Paid Sick Leave Act. This is one that a lot of employers are having to pay attention to because it basically provides up to 80 hours of paid sick leave for employees who meet, go back to the other side, please. For employees who meet one of the 6 characteristics listed here. And this is specific to the employee. So if you have a business, so for example, in the first one, it says subject to government quarantine or isolation order related to COVID-19. If your business has to close because of a isolation or quarantine order, the Sick Leave Act does not apply. The Paid Sick Leave Act only applies if you have an employee who comes to you and says, I have to stay home for one of these 6 reasons because of COVID-19. So a government quarantine, if the healthcare provider says they should self-quarantine, if they're experiencing symptoms and seeking a medical diagnosis, if they're caring for somebody who's sick or has been quarantined, if they're caring for a child whose school or place of care is closed, that also applies. And then if they're experiencing any other similar conditions. There is no small business exception for the Emergency Paid Sick Leave Act. So no matter what size business you have, if an employee comes to you and they indicate that they are ill for any of these reasons and need to be home, you have to provide them with up to 80 hours of sick leave. This 80 hours of sick leave covers 2 40-hour weeks. And the thought behind that is that COVID-19 is supposed to last only 14 days. So that 80 hours should cover any illness that they may have related to COVID-19. If they are sick beyond the 80 hours, then they can seek leave under the Family Medical Leave Act. And in that case, the regular Family Medical Leave Act would apply, meaning you'd have to have more than 50 employees. They would have to have been working for a year, and they would have, had not to have used any of their prior leave. So that's when the regular FMLA would kick in. Next slide, please. However, under the FFCRA, there is an expanded family medical leave. That is called the Emergency Family Medical Leave Expansion Act. Under the expanded leave, it only applies for employees who are caring for a child whose school or place of care is closed, or the child care provider is unavailable because of COVID-19. So this is an expanded piece from the normal family medical leave. It is an additional reason for the leave. This provides up to 10 weeks at 2/3 of the employee's regular rate of pay, and the employee must have been employed by the employer for 30 days. As I said, this is an additional qualifying reason, and the reason that is important is that if the employee has already exhausted their FMLA leave, there is a question they may not be able to take this expanded leave. There is a small business exception under the Emergency Family and Medical Leave Expansion Act. So if you have an employee who has to be out beyond the first 80 days, that is sick leave, you could be, if you have fewer than 50 employees, there may be an exception for you. It's nothing that you have to apply for. You just have to meet one of the 3 criteria. And what I did in the slide and in the resource guide is I cut and pasted directly from the Department of Labor's website so that you can see the exact verbiage here. If you meet one of these 3 criteria, then you can choose to not provide this expanded FMLA leave, okay? There's not gonna be an application process. You don't have to get approval. You do it, but you must maintain all records related to your reasons for believing you fall within that exception for 4 years. It's ambiguous. I guess it's a little bit risky, but if you can show that one of these 3 criteria apply, then you would not have to provide that expanded FMLA leave. One other thing I want to say about the Sick Leave Act, is that the Sick Leave Act is separate from an employer's own paid time off policy. So if you have an employee who has 10 hours of sick leave, you cannot force that employee to use those 10 hours before providing them with the 80 hours of sick leave. It is separate. They have to be able to use the sick leave, the 80 hours, separate and apart from any paid time off they may have. Next slide, please. Now, the good news about the FFCRA is that the government will provide tax credits that will cover the full amount of the qualified sick leave wages and qualified family leave wages. This includes any health plan expenses. So if you have to provide 80 hours of leave for an employee who is sick, or you have to provide expanded FMLA leave because an employee's schools are closed, which they're all closed in Georgia, you will receive tax credit for the wages so that at least by next year you'd be made whole. So that is important to know because you also want to make sure that you maintain all records related to any wages or health expenses that you paid on behalf of an employee who has taken leave under the FFCRA. The other piece is as with all employer-related legislation, there is no retaliation. So you cannot get a request from an employee to take sick leave and then decide that you're going to then lay that employee off. That would be considered retaliation. However, if you have someone who is on sick leave and then you decide to close your business or to lay off a group of people completely unrelated to that person's request for leave, you can still do so. If you do that, then your employees would go on unemployment and you would not have to pay any more of the sick leave or the FMLA leave if that is in fact what you're doing. Questions that I usually get about this is, what if somebody was on sick leave before this law was passed related to COVID? This became effective on April 1st. So if they were on sick leave for one of the 6 reasons, as of April 1st, it needs to convert to the emergency paid sick leave. If you lay somebody off before April 1st, then it does not apply to them. And if you lay off people or close your business after April 1st, it doesn't apply to them. It will cease to apply in those instances. Next slide, please. I also want to talk about, Robert is going to talk more about the CARES Act, but I want to talk about the expanded unemployment that exists under the CARES Act. We've gotten a lot of questions about that. Under the CARES Act, the federal government has increased the weekly compensation benefit by $600 in addition to the regular state benefit. So I believe the state benefit in Georgia is about $250 a week. Under the CARES Act, that $250 will be increased by $600. So it would be $850. And that's just an example, but that's how it would work. They're also extending the state unemployment benefit by 13 weeks. So I believe in Georgia, the current time frame for unemployment is 26 weeks. You would add 13 additional weeks to that. And then it also gives states the option of extending unemployment compensation to those who ordinarily would not receive it, including those who are self-employed, independent contractors, and those who may have limited work histories, or those who are unable to work for COVID-19 reasons. So I know there's been questions about whether this includes business owners, and it would really depend on whether or not the business owner is an employee of the business. So that depends on how the business is structured. If the business owner is not an employee of the business, they may not be able to collect unemployment under the CARES Act. Now, the legislation surrounding the CARES Act, the regulations are still being developed by the U.S. Department of Labor. This means that they have not provided any guidance to the states as to how this expanded unemployment is going to work or how they should administer it. I don't even know that they have the funds yet. So right now we are still just operating on the language of the CARES Act without any regulatory guidance. As a result, the government has promised that all payments will be backdated for eligible weeks beginning March 29th. So if you or one of your employees or former employees is on unemployment right now, they will continue to receive the normal Georgia state benefit. However, once the Department of Labor has worked out the kinks of how the CARES Act will work, then they will be able to get the extra money they should have received beginning March 29th. So they'll receive catch-up payments. The same is true for anybody who may fall into one of these extended situations, independent contractors, self-employed, etc. You will not be able to apply for benefits right now. But once the Department of Labor works out the kinks, then assuming that the state extends unemployment compensation to cover you, then you would be able to apply and receive backdated payments beginning March 29th. I believe that is it for me. Oh, no, it's not. Last slide. So on the last slide here, I have listed some resources that you all can use to answer any questions you have. Obviously, I'll be answering questions at the end of the presentation, but any additional questions, there's a Q&A on the FFCRA from the Department of Labor. There are employer requirements, employee requirements, and then there are Department of Labor posting requirements. So the FFCRA does have posters that must be posted. Now you have to post these posters even if you believe that you will seek an exception, for example, under the expanded FMLA. So all businesses must post the poster. This takes you to the link answering questions about the poster, as well as copies that you can download from the link. There's another link here for the tax credits. This is from the IRS's website. So you can go here and get more information about how you can receive the tax credits associated with the FFCRA. And then the last resource is my firm, Balch and Bingham's COVID-19 focus group. I'm a member of that group, and we have a lot of resources that we've been posting on our page about this legislation, the CARES Act, the FFCRA, and anything else related to what's happening right now with COVID-19. Thank you.
Hello, this is Robert Benson. Good morning. Pleasure to be with you. I'm a partner at King & Spalding here in Atlanta. I'm a part of our corporate finance and investments group and a member of our coronavirus task force. Owen, you can move to our next slide. I'm going to talk a little bit about the CARES Act and some of the direct aid that's available under the CARES Act to businesses. The CARES Act is a $2 trillion piece of legislation that has buckets of money for businesses, for individuals, for states, for municipalities. We're just going to talk today about a few of the programs that are available to businesses under the CARES Act. We'll talk about the Paycheck Protection Program, which is very popular right now. You've probably heard quite a bit about it. We're going to talk a little bit about the expansion of the Economic Disaster Loan Program, about loans and funding that is available to distressed sectors and businesses. And then we'll touch on some tax relief that's available for businesses under the CARES Act. Thanks. Owen, you can move on. So first, the Paycheck Protection Program. This is a $349 billion program under the CARES Act that provides funds to the SBA to deliver loans to businesses through the SBA or SBA approved lenders. And it's on a first come, first served basis. We understand that Congress will probably provide more funds under this program, but for now it's $349 billion. And to be eligible for this, you need to be a business with 500 or fewer employees or otherwise be designated as a small business concern under the SBA. And so businesses that are parts of larger corporate structures, so if they're under common ownership or management with other entities, are going to be required to include their affiliates in that employee headcount. So to make that simple, if you've got multiple businesses that you have ownership or management oversight over, and those have more than 500 in total, you need to consider the affiliate rules and see if those apply. We've been working with our clients to help them figure that out and then figure out workarounds as necessary to be able to comply with this program. The total loan amount that you'd be able to get is 2.5 times the monthly payroll cost of the business, and salaries for that purpose need to be capped at $100,000 per year. So that means that in that calculation, $100,000 is the most that you can apply for each employee. And the total cap that you can get for your total loan amount is $10 million. And then you can also refinance any sort of disaster loan that you've received from the SBA. The interest rate is 0.5%. The term is probably going to be about 10 years. We've seen that on the application. The maximum is 20 years, and no personal guarantee and no collateral is required. And then you can use the proceeds for rent. You can use it for health benefits. You can use it for utility payments. You can use it for interest. But 75% of it should be used for payroll purposes. And then you will be able to get forgiveness for the amount that's used in the first 8 weeks after you receive the loan, 75% of which should be used for payroll purposes. Okay, and then Your forgiveness, though, that amount will be reduced if the average monthly headcount during that first 8 weeks is reduced, or you reduce the salaries that you're paying to your employees. Oh, and we can move to the next. The next set of funding that is available to business is the Economic Disaster Loan Program. This program already exists, but this has been expanded to permit you to take advantage of this program in relation to COVID-19. So if you are a business with 500 or fewer employees, you can access loans under this program. And you can access an emergency grant. So at the time that you make the application for the loan, you can get $10,000 upfront in grant money. This will not need to be repaid, but note that if you also get a Paycheck protection loan, that amount is going to be reduced from the total amount of forgiveness that you can receive. A lot of clients ask us which one of these is preferable, the payment protection loan or this economic disaster loan. I can't figure out why you would go with an economic disaster loan over a payment protection loan. You don't have the forgiveness under this, and so I would think between the two, Paycheck protection is probably better. But you should consider your personal situation, and we're happy to talk through that with you. We can move to the next slide. So one thing that the CARES Act does is provide a large bucket of money to states, to businesses, to localities. It's $500 billion in potential loans and loan guarantees and other investments. So that could mean the federal government actually taking equity interests in business to support businesses as they respond to COVID-19. And so the CARES Act specifies particular industries. So it could be air carriers, it could be businesses that are providing health services, et cetera. It could be defense industry businesses, those that are considered, quote, critical to maintaining national security. It specifies those and designates buckets of money to be handed out to those businesses through the Treasury. And so eligible businesses include those that have been created in the United States or under the laws of the United States, that have significant operations in the United States or majority of employees in the United States, and that have otherwise not received adequate relief under the CARES Act, so haven't taken advantage of the Paycheck Protection Program or the economic disaster loans. Now, these programs will not permit recipients of those loans to do buybacks of equity or make dividend payments for 12 months after repayment of the loan. It's going to put restrictions on increases to compensation. As I mentioned before, the loan might come with a requirement to permit the government to have a non-voting stake in the business. And these loans can't be forgiven, and unlike the other loans that I described, these may be collateralized. Now, loans are not currently available under this program, but we are all waiting for the Treasury to provide more information on how we can take advantage of those opportunities. And we can move to the next slide. I want to mention that a portion of the $500 billion is going to be made available to businesses that have employees between 500 and 10,000 employees. So if you're unable to take advantage of the Paycheck Protection Loan or some of the economic disaster loans, there should be a lending program available to you, and the Treasury has been required to endeavor to create this program. The business can't be in bankruptcy. It's got to be domiciled in the United States. Once again, you won't be able to make pay dividends or do buybacks while the loan's outstanding. And there's going to be a critical focus on maintaining jobs here in the United States. So not doing outsourcing or offshoring of jobs, or intervening in collecting bargaining agreements. And there's going to be a requirement to remain neutral in union organizing efforts for some period, either the term of the loan or for a longer period, which would probably be 2 years after the loan is dispersed. And there will be a requirement to retain at least 90% of the workforce at full compensation and benefits through some period of time, most likely September 30th of 2020. Once again, these loans aren't currently available, but will be made available as soon as the Treasury kind of gets around to it. We're monitoring the Treasury's activity. We'll be able to let you know when these funds are available. Oh, and we can move to the next slide. I'm going to touch briefly on some of the tax relief that's available under the CARES Act. If you'd like to take advantage of any of these, one, I'd say I'm happy to talk with you about it, but you should also talk with your tax advisor. The first thing that the CARES Act does is provide allows for carrybacks of net operating losses for 5 years for each of 2018, 2019, and 2020. So that you can generate tax refunds. This is not only for corporations, but also if you have a sole proprietorship, or if you're the owner of an S corporation or other pass-through business. They've also increased the permitted deduction for business interest expense. So it's been increased under the CARES Act from 30% of adjusted taxable income to 50% for 2019. And you can use your 2019 taxable income for purposes of applying the 50% limitation in 2020. And the CARES Act permits immediate expensing for qualified improvement properties, so qualified improvements that you've made to property retroactive to 2018. So you can amend your prior year tax returns and generate tax refunds. Oh, and we can move to the next slide. I want to make special mention of these 2 tax benefits on this slide. I want you to note that these are only available if you have not taken advantage of the Paycheck Protection Loan Program. So you should really weigh, if you haven't already done your application for the Paycheck Protection Loan, you should really weigh whether this tax relief would be more beneficial to you than getting the Paycheck Protection Loan. So first is the employee retention credit. So the CARES Act provides a tax credit against employment taxes that are 50% of the amount of qualified wages, up to $10,000 per employee for 2020. If your business has been fully or partially suspended due to a shutdown order, or if your business has gross receipts that have declined quarter over quarter by 50%. And I'm sorry, that's year over year for that quarter, year over year by 50%. So if you have over 100 employees, the qualified wages are solely the wages that are paid to employees while you're not providing services due to the decline in gross receipts. If you have less than 100 employees, it's all employee wages that qualify for this tax credit. And then the second benefit that's provided in the CARES Act, for which you need to weigh against the PPP loan, is that you can defer payment of the 6.2% employer portion of FICA taxes, so Social Security, that would be imposed upon the wages that you would normally be required to withhold. So the 1/2 of those taxes will be payable on December 31st of 2021, and then the remaining half will be due on December 31st of 2022. Again, these are things that you should weigh as you're thinking about the Paycheck Protection Loan and whether or not that would apply to your business. Oh, and you can move to the next slide. So as I mentioned before, I'm part of the coronavirus task force, where we're helping folks consider all sorts of issues that they might be facing as they're dealing with COVID-19. And Owen, you can move to the next slide. I provided my contact information here. It should be available in the materials that are attached to the webinar. Feel free to contact me with any questions. That's all I have for my presentation. I think we can move to questions now. We can't hear
Calling
Leon.
Owen Montague.
All right, I will begin with the questions. Let's see.
Go
Okay.
right ahead, Samantha. Thank you. Can you hear me?
I can, yes, thank you.
Okay.
Hi, everyone. I'm Samantha Judy. I'm the program coordinator for the Atlanta Business League. So the first question we have, if I've already applied for the EIDL Advance and have a confirmation number, how long will I be contacted and how long will it take for the money to be received?
So I'm assuming that question is to me. Thank you, Samantha. So it depends. So the funds that you're supposed to receive from the EIDL program, are you talking about the grant or are you talking about the amount of the loan? I suppose you can't respond, but if you're talking about the grant, you're supposed to get that within 3 days of the application. If you're talking about the loan, that really depends on the SBA, and timing right now is I don't know if you've followed the headlines, but timing for getting funds out to businesses has been slower than anticipated. You should receive it within 1 to 2 weeks, but I can't speak on behalf of the SBA as to why it's taking so long. If you have actually been approved for the loan, you should also be able to get that grant, so that might be able to tide you over while you're waiting.
Okay. This next question could go to either Tashwanda or to you, Robert. Regarding stimulus checks, does anyone have information on the online portal to update your direct deposit information?
I don't.
Yeah, once again, we're still waiting for guidance.
Okay. Bait and switch alert. Now I'm hearing, contrary to last week, that the 10,000 bridge loan is now only 1,000 per employee. So if you only have 3 employees, you only get 3,000. So which is correct? And I guess that's a question for you, Robert.
I'm sorry, I'm not following. Could you say the question again?
Yeah. So bait and switch alert. Now I'm hearing, contrary to last week, that the 10,000 bridge loan is now only $1,000 per employee. So if you only have 3 employees, do you only get 3,000?
Okay, I'm not certain which program you're talking about with the bridge loan, but I would say if you're talking about one of the original SBA programs, so from what I understand, the terms of those programs have not changed. So if you've applied on the basis of the number of employees you have for a bridge loan to cover the payroll costs of those employees, it should still be based on the total amount of your payroll costs, not the number of employees. And so you'd be doing the calculation based off of your payroll costs.
Okay. I have not been able to pay on my business debt, but I'm a small company that uses a 1099. What is my best option?
So I presume the question is, what is your best option under the CARES Act? If you're looking for immediate funding to cover the cost of your operations, I would say what you could do in the immediate term is apply for an economic injury disaster loan and get $10,000 upfront in terms of a grant. You can also apply for the Paycheck protection loan, which will take a bit more time for you to actually get the funding for, but that might help you to cover some of your working capital costs. Obviously, you'd have to consider which one of the two is more meaningful to you, which would be better for your capital structure in terms of taking on debt. But those are 2 options that are available to you immediately. I would say, obviously, we need to know a bit more about your business and some of the concerns that you have and some of the expenses that you need to cover. And so I'm happy to talk with you at another time on that. But those are the 2 options that provide you with some immediate relief under the CARES Act.
Thank you. Tashwanda, this next question is for you. I'm self-employed. You mentioned certain self-employed persons may not be eligible. Could you please explain?
Yes, so right now, under the CARES Act, the government has allowed states to expand unemployment to include people who are self-employed. However, they have not given these states any guidance on how that is supposed to work. So right now, if you are self-employed and you would like to get unemployment compensation, you cannot apply for it because the system is not set up to accept those who are self-employed. We'll just have to wait until we get more guidance from the Department of Labor. And then once the states are set up, you can then apply and you can backdate your application or receive funds from March 29th forward, even if you're not able to actually apply for it until the end of this month.
Okay. Another question about the EDIL. Can you advise, Robert, how does one apply? Is it through a portal or is it through forms that you download?
Yep. So the application for the EIDL is on the Small Business Administration website. What I would suggest you do, though, is if you have an SBA contact through your local SBA office, I would apply that way. I would give them a call and talk to them and try to get help walking through the form that way. Otherwise, I think you might get caught up in a lot of the red tape that's going on right now with the SBA trying to get the PPP loan process going.
Okay. Next question. I applied for the Paycheck Protection Program through Wells Fargo on Saturday as soon as the online application was made available. And I received an email that they cannot begin my application at this time, but you remain in our queue based upon when you submitted your initial interest. When should this application process resume and how long does it take to get the payment?
That's a great question. So Wells Fargo in particular, as you know, they had some legal trouble a while ago, and so they've had to put a cap on the number of PPP loans that they can actually process as a part of the workout that they had with the federal government for some of the activity that they were criminally liable for. I would say that that experience, though, that you've had is no different than a lot of folks have had with their banks as they're working through this program. Unfortunately, the PPP loan program was rolled out very quickly before a lot of banks had the time to put together the appropriate portals or to get their internal processes in place to provide funds under this program. And from what I understand, there's only probably about 10% of the applications have actually received funding. And I had a number here earlier. I think it was something like by yesterday, there have been $38 billion in loans assigned. And like I said, only 130,000 probably have actually been processed. So you're in line along with the rest of America to find out when they can actually get their money. But banks are working hard. I understand that Bank of America is working really hard to try to get checks to folks. I talked with folks this morning at PNC, same thing. But you know, the backlog is there. So I can't unfortunately give you a time frame, but I can tell you that everyone's trying to get their money out as soon as possible.
Okay. I guess kind of a continuation of that question. Is there a way to check the status of a disaster loan application in the 10K grant?
So not a formal way of doing it. Once again, I suggest that you call the office where you made the application and find out what's going on that way and see if you can get a person on the line. I'm happy to help you do that as well.
All right. Regarding the PPP loan, I've submitted my application through SunTrust. Can you explain if I need to submit payroll tax form 941? My business is a C Corp with 9 employees.
You should, along with your PPP application, have provided substantiation of your payroll. And I would say generally for everyone listening on the line, as you're submitting applications for all of these loan packages, you should provide as much information as possible that you feel comfortable sharing, obviously. to minimize the amount of back and forth that you'll need to do with these lenders. As I noted before, there is a limited pot of money at this point, and it's first come, first serve. So what we've advised clients to do is to attach addendums to the application form that fully explain anything that might be a gray area, that provide whatever backup or substantiating information is necessary to explain the numbers that you put on the application. And that way you can kind of up the chances that your application can be understood by the loan officer that's reviewing it and submitted. So if you have not already done that on an application that's been submitted, I suggest that you contact your loan contact and add that information, or they will likely be contacting you for substantiating information. I would note that the form is one for the PPP loan and for the EIDL. These applications require you to basically make a representation that everything that you're putting in there is correct and true, and you will suffer penalties if found later those things are not true. So you should be very careful to make sure that you do have substantiating information that backs up the numbers that you put on these forms.
Okay, next question. I've heard that Wells Fargo is no longer accepting any new loan applications. Where do you suggest people apply for the PPP, if not through Wells Fargo?
Yeah. So if you have lending relationships with any other banks besides Wells Fargo, most banks will, over the next few weeks, be opening up portals for you to apply for these loans. Also, there are quite a few online lenders who are being approved by the SBA to also provide these loans. The SBA is trying to open up the market so that more people can access these loans, because a lot of banks are only providing these to their current customers. I'll note that if you don't already have a relationship with a lending bank, you'll have to go through the process that we call KYC, which is Know Your Customer, where you provide information to the bank so that they can make sure that you are, a real person, that you're an American citizen, et cetera, so that they can confirm your identity. So that might add a little bit of time to the application process, but you should consider doing that. I know that a few banks, though, have opened up the PPP program to folks that are not already involved in their lending programs. So that might give you another option as well. And I would suggest Bank of America, simply because I just happened to speak to someone in Bank of America, no endorsement. But from what I understand, they've opened it up, the PPP loan program, to applicants that are not currently using their lending programs. So that might be an option for you.
Okay. Through the SBA, there are rules that restrict individuals that have any probation within the last 7 years. Will this apply for the CARES Act?
It does. And I think you're talking about for applying for the loan programs. You'll see on the application that you'll need to make a representation about your criminal history and the criminal history of the owners of your business. If there are greater than 20% owners, you'll need to make a representation about their criminal history as well.
Okay. If you are self-employed, can the owner be included in the PPP application if they are not on a formal payroll?
I'd say, so one, if you are self-employed, you are permitted to provide, as substantiation for the amount of your payroll cost, the amount that you have been paid or you've paid yourself, subject to the caps that I described. I would say that even if you are not on formal payroll, I'm not sure what you mean by that, but you should have receipts or something from your business that you can show the payments that have been made to you over the past year or over the past 2 months if you're applying on the basis of this year's payroll. So you should be using that documentation to substantiate the number that you're putting on the form as your total payroll costs. when you say formal payroll, I'm not certain what that means, but whatever it is, you ought to be able to substantiate it. And happy to talk with you about that later.
Okay. Robert, you indicate that portals will be open in the coming weeks, yet it's first serve, first come. Do you think there will be money left in a few weeks?
I think there will be pressure on the federal government to make more money available. And so while this initial pot of 300 and something billion might be used up, I think that we'll see in pending or in future legislation that should roll out quickly, that we'll see more money made available. And I understand that Congress is already working on a fourth CARES Act bill that will include some more direct funding like this. I would say, though, that given the rollout of the PPP program and some of the issues that banks have had in terms of putting together their portals, in terms of getting through to the SBA to make sure that money is actually paid out to recipients, I think this program will be around for a few weeks as we roll out the kinks and get the kinks fixed. So there should be some money available, but you should definitely get your application in as soon as possible.
Okay. For those who are self-employed and who have already applied, what do you think they should do now?
So if you, I'm going to assume that's for the PPP program. If you've already applied and you're waiting on funding, I would do the things that you would typically do to ensure, that your company continues to operate as well as it possibly can. I'll be talking later this week in another forum, but one of the things that we advise folks to do is to really take stock of their company right now and see where they can make changes to their various supply chains, where they can provide alternate business service in a way that the business can still operate during this period. If you're under shutdown order, that sort of thing. If you're not an essential business, you can evaluate whether a portion of your business is essential, and that's something that you can do to operate. You can negotiate with your lender directly for funding. There's quite a few programs that a lot of banks have to make sure that companies are getting the funding that they need to operate during this time or to cover payroll costs, et cetera. So you can apply for those as well. But there's lots of practical things that you can do in the immediate term, looking through your insurance documentation to make sure that your business interruption insurance doesn't provide money to you during this time for the interruption that COVID has caused. It could require you to negotiate with suppliers to look through some of your contracts for the force majeure provisions to make sure that you might, make sure that you aren't overlooking, value there that could be unlocked to help your business in the short term.
Right. Robert, are you able to speak on those who have either applied for unemployment or, I guess, that are self-employed? What should they do?
Tashwanda.
Tashwanda, perfect. Thank you.
I think she's muted.
Yeah.
Okay. All right. I'm back. If you are self-employed and you have already applied for unemployment, I'm not sure what the status is. If it goes through, great. If it doesn't, it may just be because the states are trying to figure out what's going on with the CARES Act and the money that's supposed to come from the federal government related to qualifying self-employed individuals for unemployment. So if you're able to get through, that's good. If not, just hang tight. That information is coming. We just don't know when.
Okay. PPP says specifically that it excludes home-based businesses. My business is based out of my home, but it's a part of a partnership that operates in the airport. Clearly an infected industry. Am I really precluded from applying for PPP?
You're not precluded from applying for PPP. You just need to make sure that your application explains your business, explains it well. And we can talk about We can talk about your particular situation and confirming that you are actually applicable. In some cases, we've had companies make modifications to their business and the way it's structured to enable the business to be able to be eligible for the loan. You should really think about whether your business is in a position where it needs to make that kind of structural change to do so, but you're not ineligible to apply.
Okay. Hi, regarding the PPP loan and EIDL, because the programs were set in place to keep employees hired and working, will it affect a small business's loan application or process negatively if employees are let go or if the business has to file unemployment for former employees, particularly if termination is not a direct result of the disaster?
I would say the biggest impact has to do with forgiveness. So right now, the loans under the PPP program are essentially grants if you're able to get full forgiveness for the amounts that have been dispersed to you and used within the 8 weeks after disbursement. If there have to be reductions following the receipt of that loan, you'll see the amount of the forgiveness go down because the purpose of these loans is to try to keep people employed. And so you should think about whether, as I said before, there's a trade-off between this and some of the tax credits that you might be able to receive, et cetera. You should think about the benefit to you as you project out what might be happening to your business over the next few weeks. If the influx of cash is something that is so necessary that you're willing to forego the forgiveness portion of it and take it on as a debt on your books. Otherwise, if you know that you're going to be doing reductions in the future and not rehiring, you should think about that as well. If you do need to do reductions, but you're going to add people to your payroll, that could help too from a forgiveness perspective. But if you're going to be doing these reductions, then the forgiveness portion of this may not apply to you.
Okay. Is that the same as if you have an employee that quits versus an employee that you let go?
That's a good question. I think, as I said before, the perspective of the federal government is going to be on maintaining headcount. So certainly if you aren't doing, purposeful reductions, but you aren't maintaining positions, I think that would still be considered a reduction in headcount that would affect your forgiveness. Again, they're going to be looking at the total numbers of your payroll. So the assumption would be if someone leaves, that position remain open and would need to be filled. So we'd assume that you would refill that position even if someone walked away. And so your numbers, when you do the calculation as to your total payroll amount and the numbers of employees, if there's a reduction, that would affect the forgiveness amount.
Okay, that concludes all of the questions that I've received both online and offline.
Thank you so much, Samantha. Robert, you used the term force majeure. Would you please explain what that is?
Yes. So many commercial agreements contain a provision that says if there's an act of God, or if there's something that's outside of the control of the parties, that would preclude one party or the other from complying with their obligations under the agreement, that those parties will not be held in breach of the agreement for not performing. And so one thing that should be evaluated as you're looking through your commercial agreements is whether or not the impact of COVID-19 is covered by the provision in your agreement. We call it the force majeure agreement, the act of God provision. And so if you're required to deliver, 10 pizzas every day every day at 9 a.m. and you're unable to do so because you're not an essential business, you might be able to say to the counterparty of your agreement, I'm sorry, under force majeure, I'm not able to comply, but I'm not in violation of this agreement. Let's come together, let's work out a workaround so that our business relationship can continue and you can get the things that you need and I can get payment for my services. And so we've been working with a lot of our clients to evaluate the force majeure provision. to make sure that it covers this situation, covers the COVID-19 impact on your business, but also helping you negotiate through with your counterparty to make sure that you don't end up in court over something that you can't help.
Thank you, Robert. I'd like to, I just saw that someone asked a question about finding credible banks online. That's a tough one, but do you have any recommendations on that, Robert? Any that you are aware of?
Without endorsing, and the only reason I would say I'm not going to endorse is because this is early days, and so a lot of folks haven't set up their portals yet. But I would say that there are quite a few online banks that I think are credible outside of this program. I think of Cabbage, I think of Credigy. These are banks that have, good internal structure. They're already set up to do, online business. They understand how to attach portals, that sort of thing. And so if you don't have a relationship with a lending bank already, I would look at some of these houses as they come online with the SBA program to be able to get a loan from them. But once again, I can't endorse it because they probably aren't set up yet. So I'm not sure how their procedures are right now.
And one of the important statements that you just made, if they have become SBA certified, I think that really is the caveat. That's what you need to look for. Another area that I think many of our businesses have not looked into and that you should is check with the credit unions in Atlanta. You may be able to get an application in through them quicker than some of the banks who've already stopped taking applications. So thank you, Tashwanda Pinchback. Thank you, Robert Benson. Thank you all for joining us. We have another session this afternoon at 3 p.m. 3 other speakers who will talk more about the SBA loans, the PPP application process, and Citizens Trust Bank will also be online as one of the speakers. So thank you for joining. If you've already registered, we look forward to your involvement then, and have a great day. And if you have additional questions, please plan to send those in to us, and our goal will be to get those answered for you. Thank you very much.
Thank you.